Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, April the 14th. Starting off with a 4D Farmer, which has done a few of the things we like seeing. So we've got the bullish divergence line there, despite the lower prices for January through to March. We had that trend line break there around 28p in the middle of last month. Also looking good was the gap to the upside into the 200-day moving average, but that's the end of the climb. Current situation, though, looking encouraging again. So we've tiptoed along the rising 50-day moving average. That tends to be a good signal where it's near the lows, which is where we are at the moment. And so looking for really a retest of the peak of last month through 70 pence, perhaps as soon as the end of next month. But that shuffle along the 50-day line, a very good looking event. And we could also be treated to an end of the week close today above the top of that gap. From the end of March. A gap close buy signal would be decent as well in terms of flagging a potential further move to the upside and up towards 70 pence. Moving along to a stock or a company which I interviewed a while back, and it looks like it's just getting its act together now. Again, another situation where we've got the rising 50-day moving average at the low and broken a line of resistance, in this case from November at 9.75 pence. Above that, looking for the top of that broadening triangle from August as high as 15 pence, perhaps by the end of next month. So things moving along there quite nicely. We've also got an uptrend line in the RSI window, so we've got sort of multiple non-related positives there on the Goldstone chart. This stage, really back below the 50-day line to 8.75, really delaying the upside scenario. A story of the day, which I missed, unfortunately, because I was obviously too much of a hurry this morning, was Horizonte. Here we had the clear trend line break at 5.9 pence back in February. We then pushed through the 50-day line, pushed through the 200-day line earlier this week. But the view now with, I think, the Glencore news is that above the March peak at 7.6, we're looking for significantly higher prices. The sort of U-shaped or V-shaped bull flag, very, very encouraging indeed, and it allows us to project the shares perhaps as high as a line of resistance there, which is from back in, basically this time last year. That's heading towards 10.5 pence, and that seems to be well baked in while we're above 7.7, the March peak. Moving along to a stock which is also on the front foot. A lot of these small mining stocks looking good. Kavango, here we've broken a line of resistance, broken that falling wedge. Got bullish divergence behind us as well from March, a bullish divergence line. And above the broken resistance line there at 2.75 pence, looking for 4 pence at the top of that post-March triangle for the shares. That's also the area of the 50-day moving average. Moving along to a stock which I don't think I've covered very often, but this also looks as though it's on its way higher. We've got a bullish divergence line there, so 3 tests of that since February. Obviously a rather horrific looking extended decline for the shares, but if we can get a decent weekly close above the mid-March resistance around 7.25 pence, we could see at least the 50-day line around 8 pence initially, maybe over the next week or so. A big picture target here over the next 1 to 2 months as high as 14. Obviously quite a punchy call, but with that bullish divergence and the bear trap below the old March support at 8.7 pence, that sort of area, looks as though LoopUp may be on its way higher. On to Nostra, which has rehabilitated itself in the recent past, which is good to see. Here we had the golden cross for the shares versus 0.5 pence, so that was a potential entry point. We've got this rising trend channel in place since August last year. That's heading towards 0.8 pence, and we may see that by the end of next month. This stage only well below 0.5, really delaying the upside scenario. Ideally, we don't even go back below 0.55 ahead of a 0.8 pence target. Orosur is next, and here you can see that it just seemed to be ready to break higher. The first reason is that we've had a bear trap, March-April bear trap below the old 9.8 pence December support, so that's a bear trap turnaround. And now we're above the 50-day moving average at 10.9 and neckline resistance from March at that level. Decent end of day close above 10.9 and the 50-day line should be enough to get us up to retesting January resistance towards 16 pence, maybe by the end of next month, and hopefully a little bit sooner. Moving on to Petrel, and here we've got a situation where the shares have managed to it's another bear trap situation. So the previous support here at 1.5 pence, above that on an end of day close basis, we're looking for at least 2.25. But the main point here is just really ending the bear run in the shares that's been in place for over a year. On to a stock which is looking encouraging as well at the moment. We've got Simec. Here we've got this sort of U-shaped bull flag, support above the 50-day moving average, which is rising off the lows, which is another positive. So that does suggest that we should at least hit that October resistance line projection at 4 pence by the end of next month, especially while we remain above the rising 50-day line at 1.5 pence. Finishing off with well, actually, just a couple of stocks to go now. One after this as well. Sorry, apologies. We've got Yourgene next, and gapped up higher today through neckline support and through the 50-day moving average, around 8.75 pence. Above that, looking for the top of that broadening triangle as high as 14 pence by the end of next month. Bullish divergence there for February and March, and that has provided the momentum for the shares to jump today. Requested stock is next, Wishbone Gold, which looks as though it's ready to turn around. The main plus point at the moment is the fact that we're above the old November support at 6.9 pence. The longer we stay above that, the more sure we can be that we were actually in the aftermath of a bear trap, that early March bear trap. So if you're concerned that the shares are not doing very much at the moment, it would appear that they're basically back in their range, which is from 6.9 pence to 13 pence, and that's been in place basically since September. So the current betting is on that, and trigger for a potential move to the upside, just an end of day close above the 50-day moving average at 7.82. So if we get that over the next week or two, that could get Wishbone back on the front foot. That's it for me today. More updates over the weekend.